Welcome to Trading Nation. I'm Mike Santoli. There is a great market divide forming over Apple. While investors have fled the stock, the street is still quite bullish. D.A. Davidson, one of the biggest bulls, reiterated a $280 price target for the stock Friday, implying a whopping 80% upside. So who's got it wrong, the markets or these bullish analysts? Craig Johnson of Piper Jaffray, Boris Schlossberg of BK Asset Management here to weigh in. Craig, obviously, whatever rationale you might have had for owning Apple at the highs at $1 trillion market cap a few months ago, they've kind of been compromised. They've fallen apart. But how does the chart look to you now in the longer term context?
Mike, the chart is correcting right back to identifiable support around $150. We recently just took a bite out of Apple, added it into our model portfolio with a 2% position. We look at this stock and look at the correction that we've had, over 30% peak to trough. We've seen this before. We saw this in 16. We saw this in 2011. I don't think investors are going to get many opportunities to buy a high quality stock like this on that kind of a correction slash setback. So here's a stock that's got less than 12 times forward earnings for 2019, a little less than a 2% dividend, and from our perspective, pulled right back to technical support. We think this is a stock that should be bought going into 2019, Mike.
All right, and just quickly, Craig, how high do you think it goes? I mean, are we going to be approaching the old highs at all?
I think you could probably get back to the old highs, and I'll just remind you that this is followed by Mike Olson at Piper. He's got a $222 target on the stock, and again, that's pretty close to the old highs, and I think that's going to be something we can achieve. Maybe not in 2019, but certainly in 2020 that could be achieved.
All right, so Boris, yes, the stock looks cheap, but obviously perhaps for some reasons. How are you viewing it right now?
Yeah, so the stock looks cheap, and I'm with Greg that I think it's probably a good nibble at this point as far as valuation goes, but I am skeptical as to whether it's going to skyrocket back up to fresh highs in the near term. I think you have to have a Warren Buffett type of an outlook and be a much longer term investor on the stock. The main issue with the stock right now is something that nobody can really forecast, which is China. And there, the issue is much more political as it is economic, in a sense that if the Chinese consumers are staging a soft boycott of Apple, that's certainly going to take a big hurt on them going forward. On the other hand, I think the company's done a great job protecting its moat. And ironically enough, whenever I talk to people as to why people stay with Apple products, it's not because of biometrics, it's not because of the latest photo gadgets, it's basically because of iMessage. And I think that type of hold, that type of lock-in, is just very valuable to Apple going forward. So they're going to continue to be able to maintain their customer base and maintain the market share. Given the valuation, given the financials they have on the books, it's certainly a great value proposition at this point. I just don't know if it's going to skyrocket back up in near term.
Yeah, so I guess we won't know exactly how many iPhones they're selling, but that sticky ecosystem is probably what matters most going ahead for the stock. Guys, thanks a lot. Appreciate you joining us today. And thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.